what requires an approval from CMHC so that we can provide a certain level of comfort up front. Like you said, nothing is certain, and I'll always say that, like, until you have a certificate of insurance in your hand, nothing is certain.
That's right.
You're listening to the DORE Podcast, where we spotlight the people, ideas, and businesses keeping Ottawa running. From contractors to real estate investors, entrepreneurs to industry experts, we dive into real conversations and help grow everybody's pie.
Episode 13, Canada ICI.
Matt, here we are. Thank you for coming to the DORE Podcast. We're very pleased to have you today. So obviously, I think the audience is really going to enjoy this conversation about your experience with lending, and more specifically for multifamily investors and the CMHC options that are available to those potential investors. So can you tell us, Mike, Mike is the one filming. Matt is the one in front of me. So what is CMHC from a macro perspective? Why do investors use the CMHC certificate of insurance to invest in real estate, in multifamily real estate?
Well, no, thanks, Dan, first of all, for having me here and thinking of me to provide the input on CMHC. So I'd say the main reason why investors look towards CMHC is to find products that can allow them to finance, whether it's a purchase or construction or refinance, up to a higher leverage than what the traditional lenders can provide. So we're talking leverage points up to, say, 95% of cost during construction or 95% of value on a purchase or a refinance. So that's probably the biggest item that they would be looking for. Second item would be cost of capital. So CMHC offers insurance on their product, and so that insurance allows the lenders that provide the money to risk rate the loan at zero, essentially, and allow them to price the loan different than a conventional loan would go for. Typically, on average, CMHC's interest rates are roughly 1% less than conventional rates.
Okay. Yeah. And I mean, from an investor standpoint, I mean, obviously not everybody, this is not a product that's meant for everybody. There's a process that's to it. I mean, obviously I've been fortunate enough to have gone down this path with you several times, and you've helped some clients of mine go through this path. So obviously I know a bit more about this, but this podcast is really trying to get a sense on, who is this for? What does that process look like? And obviously if they want more details at the end, they can reach out to you directly. But more specifically, if somebody is an investor and they're looking to buy or take advantage of the program, I know, from a standpoint of some clients that I've talked to, they'll look at the website on CMHC and they think it's very simple, right? And I mean, my experience has been that had you not been in my corner, it definitely wasn't as simple as what the website is, it suggests. So from a standpoint of investor, like who's the target audience for this in terms of this program, in your opinion?
Yeah, so I mean, the high level brushstrokes is that it's multifamily rental only product. 5 units or more would qualify. So those are the key points. So if it is 4 and less, it's considered kind of residential retail. That's basically qualifies as conventional. Sure. CMHC does have programs for the 4 and less, but for commercial multifamily properties 5 and up, it's a different insurance program, which we'll dive in further today.
Yeah.
In terms of who it's not meant for is typically the kind of the buy and flip or construct and flip developers.
Sure.
CMHC wants to provide this product to investors or developers that are kind of in a buy and hold strategy. They don't necessarily want to touch their certificate insurance more than once. They will on exception basis, but if the intent for the developer is to develop and, say, flip the property on completion, CMHC doesn't necessarily want to entice or get behind those developers in terms of profiting that success.
Now, leverage,
the devil's advocate to that is that developer would be looking to probably recycle those proceeds to develop more multifamily and meet the mandate of CMHC. So there's really, I could see the reason why they should open their doors, or CMHC should open those doors to that developer. But unfortunately, CMHC wants to retain the certificate of insurance with the original owner. If that developer does sell at completion, CMHC may allow that, but it'll be lessons learned on the next file where CMHC may flag that developer for future requests.
Okay. Yeah, and you alluded to that in one of our files. So my understanding as well, there's really three types of different ways that we get involved with exploring this. One being you're developing a multifamily project and you're seeking to get CMHC's approval on the construction loan and so on, or somebody buying an existing property that's stabilized and looking to use the certificate of insurance in order to benefit from that program based on what you're saying, or somebody looking to refinancing an existing product, an existing asset, and taking advantage of those options as well. So how does it differ from, say, development to a new purchase to, say, a refinancing? Is it pretty much all the same, or like what are the nuances that go from one to the next?
Yeah, so depending on if you're building a project versus acquiring or refinancing an existing asset, depends. That'll change on terms of the information required to be able to qualify.
Okay.
For construction, CMHC will limit their financing based on loan to cost. So based on your budget, they'll go up to
on a new build.
On a new build,
that's
correct,
right.
on development.
Yeah.
Whereas if it's an existing asset, then they'll look at a loan to value. So they'll look at more so the pro forma side, determine the cap rate, supported by an appraisal, and then go up to the value. So on the development side, with CMHC, they will essentially require a budget, a pro forma, and a rent roll to be able to determine what the potential loan amount could look like. And so we can take that information prior to submitting to CMHC, run the numbers, and run a few scenarios, because CMHC has a couple of insured programs, not just, say, MLI Select, which is predominantly the insurance program that most developers are looking towards.
Sure.
But there are other programs that we can look into within CMHC to determine which is the right fit.
Okay.
Within the MLI Select program, there's different parameters as to how you can qualify. There's 3 pillars of qualification: affordability, energy efficiency, and accessibility. And depending on
affordability, meaning like under market rent, or that certain aspects.
Correct. So CMHC kind of sets the affordability criteria depending on the location of the asset across the country. So there's different affordability criteria in different markets across the country. Specifically in Ottawa, the affordability, or the affordable rent that CMHC has determined is $15.35 a month. Whereas
$15.35 for a 1-bedroom, 2-bedroom, or
can be over any unit type that you can apply it
so
against.
That number is considered affordable, whether it's a 1, 2, or 3.
Correct. So if you have a bachelor, let's say, that at market based on an appraisal is going for $1,000 or $1,100.
Sure.
That unit would qualify as an affordable unit, because it has to be $15.35 or less within Ottawa.
Interesting.
Yeah.
And I guess that varies from year to year.
Correct. So yes and no. So CMHC is currently using 2019's median renter income statistics from StatsCan.
Wow. Okay.
We are told that the 2022 numbers have been favorable in terms of a higher median renter income. And so once CMHC has that information from Stats Canada, they will update the affordable number, which should be higher. As to when that's supposed to come out,
I think they'll be higher.
Yeah, I'm hoping they will be higher. Well, they have indicated it will be higher.
Of course, yeah.
As to when they release that.
I didn't realize they were still using 2019 numbers in 2025.
At DORE, we go beyond basic property management. We pair tenants with homes that fit their lives and landlords with tenants they can trust. Inquire today and rent from people who care.
So just a quick backstory to that. So 2019 was the last year prior to 2022 where the median renter income was the highest.
Okay.
Going into 2020, 2021, COVID hit.
Yeah.
And so a lot of the renters in the markets had taken CERB payments from the government.
Yes.
And so when they're declaring income and you back out CERB, their actual income was lower than the 2019s. So CMHC has been using the 2019 as the benchmark until there's been a higher year of income, which they have received in 2022. So we're just waiting for that update.
When is that expected to come out, you know?
So they told us last spring of 2024 that this increase was going to occur, and they were expecting fall of 2024.
Okay.
And we're going into 2025. So
yeah.
We would hope that this change would occur sometime in spring of this year.
Oh, okay. Okay, yeah. So it's imminent. Okay.
That's the anticipation.
Yeah.
But it could be further. They haven't defined that yet.
And it's interesting because one of the nuances that maybe somebody listening may not get that you had flagged to us a while back on a project is obviously when you're using the CMHC's product, say on a development play, and you're using your actual costs as your means of financing, as opposed to a stabilized asset where you may have created some value by stabilizing the asset, then you're running off two different numbers.
Correct.
Right.
Yeah.
So it's interesting to that's a nuance there that I think is vitally important when somebody's selecting that product and seeing at what stage they want to get involved, if they want to get involved, right?
100%. And that's where we can add value. Prior to going to CMHC and investing that time and cost to go through the program, we can run the numbers upfront and consult at that point if it's a feasible project,
right?
And or do you need to go back to the budget to make some adjustments to make it work, or change your unit types? We can help assist that upfront to determine.
Yeah, because I remember when we were doing it with you, obviously you'd have different scenarios where we're looking at depending on which way we want to go. But it was a really, because it's interesting because it we were chatting a bit before where it's when you have people, and I've talked to clients because obviously I sell real estate as well, and you realize a lot of people haven't used the CMHC product, and then they learn about it, but then they think that it's as simple as what's on the website, right? And obviously when we go through that, I think it's vitally important to have somebody that's done it for the amount of time that you do. And obviously my understanding as well with Canada ICI is that I think 95% of your files are through CMHC. Did I understand that correctly? Or?
I would say that we're a conventional lender / broker as well as we do CMHC business.
Sure.
Just due to the nature of the asset class being multifamily in nature, the bulk of our files tends to gear towards CMHC.
Sure.
But we do all asset classes across the country. And so we're essentially a one-stop shop lender / broker for our clients.
Right.
And so specifically for CMHC, we're a CMHC approved lender. And so we have the ability to submit an application to CMHC because you do have to go through a CMHC approved lender. To be able to obtain the insurance. And then once we have that piece of paper, that insurance from CMHC, then we can provide the loan terms and fund the deal for our clients.
Yeah, because CMHC is an insurance for the lender.
Correct.
Based on the asset and the person applying.
Yep, absolutely.
So it's portable. So it's not tied into, so you could refinance at a later date and still use the insurance with another lender on renewal. Do you understand that?
That's
correctly?
right. The insurance is portable. So at the end of each term, you could get another renewal from that lender, or you can shop the market to other CMHC approved lenders.
Sure. Okay. And we talked about qualifying the building and so on, but obviously, I know that there's an element of not just qualifying the building, but for CMHC's purposes, there's certain things that the individual or the corporation or the group that's applying needs to meet in terms of net worth and certain aspects. Can you give us the macros on that?
For sure. Yeah. So CMHC is going to look at the borrower's experience. So if it's construction, they're going to want to look at your development capacity. What have you done in the past that is comparable to the project that you're proposing?
Sure.
And so they're going to look for a minimum of 5 years of development experience from you, the developer.
Yeah.
If you as the developer do not qualify from an experience standpoint, you can hire a GC that has that experience to kind of pass that test of experience. The recent change, I guess, with CMHC is more risk-based in that if the developer does not have the experience in terms of building comparable sized projects, they are imposing bonding on projects, project bonding. And so that's another layer of insurance, if you will, that CMHC puts in place to protect themselves for those in those situations. So even though the GC is more than qualified, they're going to look at the developer and say, hey, if you had to trim the fat on the budget and punt the GC, or the GC walks, can you pick up a hammer and build this thing yourself?
And when you say developer, that's assuming that the application CMHC is with the developer. But if it's actually a buyer using the developer, does the developer still need to? I guess if the borrower, the one that actually has the project, hires a GC, does the GC have to go through any type of scrutiny in terms of CMHC acceptance, or it's really just based on the actual borrower, like the actual person that owns the project?
So in that case, CMHC will, if the developer doesn't have the experience, they'll want to look at the GC's experience to ensure that they're comfortable with the development risk of the profile. And so if the GC shows enough comfort, then CMHC will then determine whether bonding is required or not. At that stage. It's not that the GC needs to provide a guarantee or anything. They just need to provide some information in terms of their history and what projects they're working on, and does it provide enough comfort for CMHC. So that's one of the items that CMHC will pre-qualify for a developer. Other pieces to it is from a net worth standpoint, and this is basically anybody in a proponent of the project. Proponent to CMHC's definition is a borrower and or guarantor within the project. And so on a combined basis, CMHC wants the total net worth to be equivalent or greater than 25% of the requested loan amount. So we need to do that in terms of verifying net worth. So that could be your equity in your home. It could be cash or investments.
Or other real estate, or
correct. Yeah, exactly. And we need to verify those assets.
25%. 25% of the loan amount.
Correct.
At a minimum.
In
terms of net worth.
That's a check in the box CMHC requirement. And so and the verification is key. So it's not just a personal net worth. I'm good for it, because the net worth is as good as the piece of paper that it's written on to CMHC's eyes. So they want to see bank statements to verify cash accounts, appraisal for the real estate, and corresponding mortgage to verify the equity.
And also, if I'm not mistaken as well, I've seen files where there was a requirement, because of the lack of experience, say, on the borrower, to have a property management company involved in securing the certificate of insurance. Did I understand that correctly?
Correct. So post completion, or if you have an investor that is purchasing a property, same scrutiny, but on a property management side. So they're going to look at the purchaser and say, hey, if you want to self-manage this thing, then show us that you have the capacity to self-manage 5 years of experience of comparable properties. If you don't, then CMHC within their certificate of insurance will require a third property manager that has.
I know DORE Property Management has been brought on files like that, where there was a requirement, and obviously we were part of the deal based on one of those requirements from CMHC for the borrower to get the financing. So I knew that there was some provisions there that were tied into the experience, right?
Absolutely.
So I'll ask you a loaded question.
Bring it.
How long does it take to get a certificate of insurance from CMHC?
That's easy. That's easy.
Professional, reliable, local. DORE Property Management has been Ottawa's choice for 20 plus years. Call 613-227-0000 or visit DORERentals.com.
Oh, really?
Yeah.
From 0 to 12 months.
Yes, it's within that window. Fortunately, it's closer to 0. In the past, CMHC has had an influx of applications to the point where it was taking 6 to 8 months to go through the process. So, I mean, so much can happen within that period of time.
Of course.
And so how do you manage a purchase, or how do you manage fixing costs with trades or suppliers between now and then? So fortunately, CMHC has caught up on a lot of that queue process, and they also went through a huge hiring frenzy as well. So they hired a bunch of underwriters that have kind of cut their teeth over the last year and a bit. And so now they're at a capacity where we're submitting applications and getting an underwriter assigned within a week at the earliest of submission. And depending on the complexity of the file, if it's a purchase or like a single advance request, like we're seeing same day approvals. Like they'll just blitz those approvals out the door. So as early as a week. If it's a construction file, it has some complexity to it. Maybe a larger loan in a sense, then we could see an underwriter taking a little bit more time because only senior underwriters, like it's a different bucket of applications where like a more inexperienced underwriter couldn't access.
Exactly.
So that bucket will grow.
It's a lot more complicated.
Correct. So we're probably seeing, on average, it could take say a month to a month and a half to get an underwriter assigned within that.
Just assigned.
Correct. So we're
so assigned means it's just somebody from CMHC looking at your
saying,
file.
Hey, I got your file.
I got your file.
That's right.
Nothing's been done yet.
So that's the start, right? They give the pleasantry, hey, I'm your guy. But depending on that underwriter, they may have 10 other applications on the go.
Right.
So they say, hey, got your file? I'll get back to you. They go to the next file. They do their due diligence. They go to the next file. They go on holidays. Like there's so many things that can happen, right? Between the time they get back to your file and say, hey, we've done our preliminary review. So that turnaround time could take, an underwriter, a week to say maybe 2 weeks to provide like like a preliminary indication, or hey, we need X, Y, Z of additional information to proceed. But I would say on average, it's roughly 2 weeks. Like they've been really good lately in terms of
2 weeks to actually get
an approval.
An approval
on average.
Okay. I guess the files I was involved in were more complicated.
Much more complicated, that's for sure. Yes.
I was going to say that wasn't my experience. But
yes. Well, and so again, the underwriter could have so many other applications on the go that they can't give you the attention that obviously you deserve.
Fair enough.
And so,
or maybe they just put me at the bottom of the pile.
Another Dan.
No.
So, but I mean, we're always constantly checking in with the underwriters. Obviously, squeaky wheel scenario sometimes does help in terms of getting a further. If there's a timing issue, then we like to relay that to the underwriter up front. Like obviously everybody's file is priority in their minds. But if we say, hey, like there is a timing issue here, so is there any way to push us up front? We're not doing that on all files, but those that require it. No, and
it's because it can get complicated. And I know with the backlog, it was kind of an interesting thing.
It was a sit and wait.
Yeah,
was basically
exactly what you get when there's just so much you can do. There's not much you can do once it's in the queue, and you're like, we're just waiting, right? It's so obviously when you go through that process. And I know this is one of the things I really liked and enjoyed working with you is that, if I have a client, we try to go through the preliminary checks and balances to see, hey, Matt, you think this file actually has a chance of going through CMHC. So there's a lot of work that gets done before a file actually gets submitted to CMHC. Right. Like, I mean, that was my experience with you. We'd go through the macros, the numbers, the performance, whether it's, making sure the net worth statements are adequate, the valuations, the operations of the building. So I know there's a lot of work before you're not just, submitting blindly to CMHC. But once those checks and balances are done, and I know, my experience with you as well is I ask you, Matt, are we, from your gut, seeing what you're seeing, is this file have a chance of going through, or is there anything else, right? But in your experience, if you go through that process, I'm assuming there's no guarantee to get approved, right? But what would be a common reason or reasons why a file wouldn't go through after checking the macros, right? That the net worth is okay, that the underwriting is good, that the appraisals are accurate. Like what are the common reasons why a file, say CMHC, would say no, right? Because I think that that's what we have to tell clients. I mean, when I sell real estate, we want to tell clients, even though we go through that process, there's no guarantee. Right. That this is going to be approved. It's not just a matter of waiting to get the approval. It's a matter of waiting to hopefully you get approved. But like, what would be common reasons why, say, a file wouldn't go through?
And so fortunately enough, because of the volumes that Canada ICI does as a whole, we have a lot of bench strength in terms of what requires an approval from CMHC, so that we can provide a certain level of comfort up front. Like you said, nothing is certain. And I'll always say that, like, until you have a certificate of insurance in your hand, nothing is certain.
That's right.
But what we can provide is a certain level of reasonable assumption that CMHC will approve based on the financial metrics of the property information, and then as well the BORE guarantor items that also need to qualify.
Sure.
And so before we even submit an application to CMHC, we have a checklist, or CMHC provides a checklist to lenders that you have to essentially meet.
Okay.
CMHC will not accept an application if you're missing a T1 tax statement from 2023.
So just for you to submit the file, you got to make sure and it's in your best interest to make sure that's all there, because if something's off, and you want to verify too, because everybody would be working for nothing, right?
It causes delays. Obviously, CMHC is now you're creating more work for CMHC to send you emails to say you have to resubmit and here's why. And so we ensure that we have absolutely everything before we submit the application. So what I do is we provide a very detailed wish list email. And basically it's a checklist to the client, so that we can just go back and forth and fulfill that list and update it as we go. And so that everybody understands where we're at any given stage. Once we've satisfied the requirements, then, even before we submit, we'll have that conversation with the client to say, hey, here's how we're going to submit this application. Does everything look good to you as well? And then we'll submit on that basis.
Okay. Yeah. So I haven't had the experience of being declined after going through the process. Have you had files that once you've done all your checklists that got declined for a reason X, or? So,
I would say that our success ratio is probably 99%.
Okay.
Because we understand what CMHC is looking for up front.
Okay.
It could be those very rare cases where CMHC will decline. Could be due to the fact that they may be exposed to the client and may not have any more appetite to lend to that specific client, which is something that is unforeseen if the client doesn't disclose.
Right.
It could be asset specific, retirement home in an area where there's not necessarily a need, or CMHC doesn't have enough exposure to that market to understand absorption and comfortability to lend to on a construction basis.
Yes.
If it's an existing asset that has 5+ years of proven performance of stabilized rents and revenues, then it's a little bit easier for them to say yes. But if it's new construction in a market that they don't understand, they may just say no.
Okay. Yeah. Okay. So the chances of it being declined are fairly low, based on what you're saying, and that's my experiences. They've always been approved. The delay obviously is somewhat not within your control, but so there's a good certainty if you go through the original assessment that you put through the client through, that the chances are, if anything had to be flagged, it'd be flagged at that point before going through that whole process, I would assume.
Correct. Yeah, we have enough repetitions across the country, and we share as a company with all of the offices as to what we're seeing from CMHC in terms of approvals, what's not being received or well received, so that we can prep our clients for future files and manage expectations.
Right. And one of the things I think, if I recall, also, you on one of the recent files we did as well is you said CMHC was looking at the actual area where this project was being proposed, right, to make sure that there's not an oversupply or overexposure or anything of that nature. So the client could very well, have all the requirements, the building metrics, or the pro forma may very well be in line with the market, but if there's too many being built in a certain area, it could be a reason why CMHC would shy away from exploring that their certificate of insurance.
I would say that if there's 10 buildings being developed in that area, 9 out of those 10 buildings, potentially even 10 out of those buildings, are exposed to CMHC because they have been predominantly the lender of choice, if you will. And so if you were the first development in that market, then it's going to be easier to go through the CMHC process.
Right.
But if you're the 5th, 6th, 7th, 8th, 9th, 10th, then that appetite from CMHC diminishes. because now they're looking at exposure risk of being, having those units absorbed because there's too much product coming online.
Too much at the same time.
Correct.
Yeah. Okay.
Looking for stable income-producing assets? At DORE, we help clients buy and sell commercial properties that deliver long-term value. From multifamily buildings to turnkey retail and office investments, let's talk about your next smart move. Visit us at doremultiresidential.com.
And one of the recent conversations we had a while back also was there'd been a change to CMHC, and I wasn't aware of that because I wasn't in any active files, but I had a client that had, I guess, put deposits on buying some new inventory and pulled out and essentially advised us that there'd been a change with CMHC's approval process that I wasn't aware of. Obviously, I didn't have any active files at the time, so I remember calling you, say, Matt, I said, is there any changes lately with CMHC? And you were pointed out that I guess the client that we were working with had bought, I want to say 5, 6, or 7 duplexes, and that CMHC had, I don't know if they changed the rules or they applied them a bit differently, but there was something there where you pointed out that no, this is not really what the CMHC's product is meant for. Can you elaborate on that a bit?
Yeah, so CMHC recently made a rule change on some of the qualifications for combining lots to obtain 5 or more units. So let's just say that the borrower has, say, 2 lots side by side. One lot has a triplex, the other one has a duplex. And so we can, previously, you could request for blanket insurance over both properties, so long as both the duplex and the triplex look like a similar aesthetic.
Sure.
Like it looks like one project essentially, right? Then CMHC would say, okay, yeah, we can blanket insure both
and then
titles.
5, and
now you're 5 and up, you qualify.
Sure.
They want to get away from that. And what kind of drove them to that is there was the developers that were, say, building these for sale, these assets for sale. And it could be as much as like one home, like a detached home per lot.
Yep.
So you have a string of 10 lots that were really designed for sale.
Sure.
And let's just say the market that those were in weren't well received. They weren't getting the love. And so that developer is trying to salvage that project by going through the CMHC program and insuring all 10 lots.
As one application.
Correct.
Okay.
And so CMHC was getting an influx of those requests, and they said, do we really want to spend our resources and insurance on these types of plays, or do we want to revisit? So they basically put a pause. So they didn't necessarily say full stop on these, like officially. It was like pause. So any applications in the queue were basically in limbo until CMHC made a decision. So what they have come out with now is that they will entertain these types of strategies. In the example of the 2 lots where you have a triplex and a duplex, if those 2 buildings are connected, not by way of like a breezeway, but like the buildings are connected, so it looks like one building on the outside, then CMHC will say, okay, we can insure that because it's one building over 2 lots, we can insure that. Alternatively to that, if you have one lot that has multiple buildings on that one legal lot, up to 5 units. So you have, let's just say,
so
5.
If it's the same lot, but it has multiple
5
buildings,
standalone buildings.
You beat me to that. That was a question I was going to ask you.
Yes, then you qualify on that.
You'd qualify because it's sitting on the same.
Correct.
So they're registered under one title, essentially.
They want it such that the 5 units and up are on one legal lot.
Sure.
Okay. If it is spanning over multiple lots, then it has to be one building.
Okay.
That's essentially the rule of thumb now.
Okay. Yeah. So it hasn't changed. Yeah. Okay. So I can see where they're trying to limit.
They've limited it. They haven't gotten rid of 4 and less.
Sure.
Now CMHC does have a program on units that are, say, 1 to 4 units. But that's more on like the retail side, like a personal home mortgage, where you can get up to, say, 80% of value insured and say amortizations up to 25 years. You could qualify under that program, but that's through the kind of the the retail banking side of things.
Okay. And just to close this off, so Canada ICI, you do multiple products. I don't know if you just tell everybody also, because I think there's a commercial element to it. Most of it is multifamily, and most of it is CMHC because of the way the product is set up. But anything else you can tell us about Canada ICI as a whole? Because I think you guys operate through Canada, and you have lots of exposure to the market, lots of experience, obviously. So maybe just do a quick summary for everybody to know that there's limits. Sure. There's different ways that they can deal with you.
Yeah. So the elevator pitch is this: we've been around since '93. We have 10 offices across the country, from BC all the way to Nova Scotia.
Yep.
We are a lender/brokerage, and so from a lender standpoint, we have our own proprietary capital that is made up of 30 plus investors that we service on behalf of, but over $10 billion of capital that we can deploy on a conventional basis. And that's over all asset classes. So not just multifamily, but we can do industrial, retail, office, you name it. And we do everything from acquisition, construction, bridge, term, refi.
Okay.
No loan minimums or maximums. So we'll look at that from a lender basis, as well as we have access to over 125 lending relationships across the country. That's institutional style capital. That could be, pension funds, life cos, Schedule I banks, credit unions, and then, all the way to the other side where it's more, private lending and mortgage investment corps. So we can really understand and provide that type of offering that fits the need for the client, depending on the need of financing. So that's on the conventional basis. On the CMHC front, we are a CMHC approved lender. So we have that status that allows us to submit applications on behalf of the client directly to CMHC.
Yep.
So we can get that certificate of insurance.
Which is a big advantage.
It's
a huge advantage.
Right now it is. And we have a large allocation of capital with the partners that we work with in the CMHC space to be able to ensure that we can fund deals for our clients. Some lenders are running out of capacity on the CMHC-insured funds side of things. So that is a benefit of who has the capital.
Sure.
And so with that CMHC-insured side, we do a large volume across the country. So we see a lot of deals, do a lot of deals. And so we can provide that consultation to our clients upfront to as an added service, not just a deal taker submission. To walk them through the process and make sure it's a feasible project. So we're a one-stop shop for our clients.
And you have the office here in Ottawa too. As I know you said coast to coast, but I want to make sure people listening to this, chances are in Ottawa. So you have an office in Ottawa.
So I'm born and raised Winnipeg.
Yep.
Cut my teeth in Winnipeg. Moved to Ottawa 3 years ago to manage our office and essentially expand our presence in this market, Ottawa and Gatineau. But my book of business spans from BC all the way to Nova Scotia. And so I have a lot of clients coast to coast that keep me busy. But our primary focus is to continue to grow our business in this market.
That's awesome. Yeah. Hey, Matt, I'm speaking from experience. I've dealt with you for quite a few years already. We've done multiple files together. It's always been very pleasant. And obviously I'm happy that you're able to come in so we can talk to mutual clients about what you can do. But if anybody has any questions, feel free to reach to Matt. If you need a reference, you can call me. I'll happily have a discussion and refer Matt. But thank you for taking the time to come in, shoot this quick podcast and help everybody's pie grow.
Perfect. Thanks.
Sounds good.
Appreciate
Perfect.
it.
Thank you.
Cheers.
Thanks.
Thanks for tuning in to another episode of the DORE Podcast. If you're an entrepreneur or investor focused on real estate in Ottawa, we want to hear from you. Apply to be a guest and check out our video content anytime on YouTube.